Good morning and welcome to the trade setup right here on BQ Prime. I'm Neeraj Shah. Let's take stock of the global news flow before we get down to the market action, which is okay, by the way. So, EU has approved Microsoft's $69 billion acquisition, which is great news for Microsoft per se, and interesting from a cross-border acquisition perspective as well. This has faced many a hurdle, many a question mark, and it's finally gone ahead. Germany's quote unquote urged China to shut secret police outposts in Berlin. It's quite something as to what's happening out there, wherein China can even think of having secret police outposts. Quite something, really. In a foreign country is the point I'm trying to make. A top Taiwan lawmaker visits US capital to meet China hardliners. And India's trade deficit falls to the lowest level since September 2021, the April trade deficit, that is, and that's great news as well. Well, clearly, I think the lower crude imports are playing their part. Yesterday, we did this small conversation with the Motilal Oswal Wealth team, and they've highlighted in the April letter that the May newsletter that it is crude, which is the pivotal thing when it comes to India, and naturally so. But the data that they presented was pretty interesting. Nevertheless, markets, what the US markets did, well, they were okay in yesterday's session. The futures are trading flattish, and as a result of what US is doing, Asia too this morning is mixed, but largely on the positive side. The other cues are fine, no great changes there. The 10-year yield at our $3.5 index, 102, so no big changes on any of those. And after a good session in trade yesterday, though we did end from the highs, we ended slightly lower. The SGX still indicates a positive start at about 0.29% at 18,457. So there we have it. We kind of have a setup of what we are likely to do at the start. Now, the key is foreign flows continue. The last 30 days, FIs have bought more than 29,000 crores. They bought nearly 1,700 crores worth of equities in trade yesterday as well. Staggering numbers. And no surprise then, therefore, that banks continue to shine, aided by institutional flows. And the index yesterday kissed near all-time highs, which is actually a great thing from a market's perspective as well. You need banks to do well. Remember, yesterday we were talking about that the weak may have a weak bias. Banks are the likely antidote. For now, banks are proving to be the same. You would argue that real estate is also doing well. It doesn't have weightage on the index. Banks have weightage on the index. But as an individual sector, real estate is shining. Yesterday's session as well, it did really well, was the top performer by a wide margin, 4% higher, and continues to remain a safe bet despite the run-up and possibilities of near-term consolidation. Just before we get to stocks to watch, viewers, there's another pocket that you need to keep in mind. It's my error. I should have brought this Jeffries note yesterday, but nevertheless, the long and short of that note, as well as what some of the other fund managers have also told us, is that you need to look at staples, because if indeed the raw material costs are coming off, then that's a positive for the staples, even if demand stays constant. But if indeed the Karnataka election template is followed by the other states, then you are looking at heavy rural spending, and that might result in higher consumption of staples. And therefore, you might actually have these companies do well. So FMCG is certainly a pocket that everybody needs to keep in mind for the next 6 months. What about stocks to watch today? That's the key thing. So Astral comes up as the first one. Revenues up 8% at 1506 crores. The estimates were 1489, so in line. But the EBITDA and the EBITDA margin is where the trick happened. EBITDA up 45.87% at 311 crores. The Bloomberg estimates were 247 crores. EBITDA margin at 20.64 versus the estimate of 16.6%. Quite stunning, really, the EBITDA and EBITDA margin performance. So good going there. And net profit up 43% at 206 crores. The Bloomberg estimate was 149 crores. Now, the key, viewers, out here is that we know that Astral, if you would have heard the third quarter interview, the company had said that in the second quarter, their capacity utilization levels were 53%. Q3, it was 57. And the management had said that they was very confident that they'll reach capacity utilization levels of nearly 61, 62%. So if that were to happen, naturally operating leverage comes into play, and therefore you would expect EBITDA margins to do well. The con call is still slated to happen today, and therefore will not have brokerage calls until then, but clearly shows that everything else is doing, and the key parts are doing well. So adhesives and paints revenues were up 25%, and EBIT margin was much higher than brokerage estimates. And plastics, of course, revenues up 4%, but the volume growth was 15%. Quite stunning really there. It's good going there. We know that pipes companies largely have done okay. The commentary around pipe companies' numbers seem positive. You've heard the commentary from Apollo Pipes. You've heard the commentary from Supreme as well. Clearly goes to show that these companies are doing rather well for themselves, and times ahead could be positive. Let's wait and watch if that indeed turns out. I would suspect that Astral will have a positive reaction in the session today. Then a few which disappointed. So PVR Inox, you could argue a bit of a disappointment because revenues up 22%. The estimates were, revenues were higher than estimated, but EBITDA had a problem. EBITDA margin had a problem. Net loss much higher than the estimated net loss. Maybe the stock reacts negatively. I would think that some people could take heart from the fact that the revenue numbers are looking okay as well. 22% growth is pretty strong, and we haven't seen Bollywood make a meaningful comeback as yet. If that were to happen in the second half, then things could really turn around. Keep in mind also that, rather not second half, in the remainder of the year, keep in mind that as the festive season approaches and the releases pick up, it might be even better for arguably the only multiplex chain that people would be able to invest in currently. Berger Paints, a bit to be desired, really. Revenues at 2443, the estimates were 2467, so no disappointments there. Margins also flattish. Net profit, though, slightly lower than estimated. The key is when you compare a Berger to an Asian Paints, on most accounts, Berger is found a bit wanting. I was reading a note today, I don't remember which brokerage, but they compared what Berger has done versus what Asian Paints has done on a 3-year CAGR on multiple line items, including revenues, including margins, including return ratios, including profitability. And therefore, the argument is that if you really want to invest in paints, why not Asian if you do? So, a bit of a disappointment to my mind. Maybe the stock reacts. Let's wait and watch. Coromandel, certainly a bit of a disappointment. Revenues were okay. 5475 versus 5506, so largely in line. EBITDA margins, though, lower on that base. It's a big miss. 7.36 versus 8.2 estimated, and versus 8.98 corresponding quarter last year. Net profit down 15% at 246. The estimates were 312. So a bit of a bummer, really. Coromandel as well. What was in line with estimates was Pfizer. Exactly in line with estimates. Hardly any changes there for Pfizer. I'm just trying to see if there is anything that I've missed in terms of numbers. Yeah, there are a few that I haven't given before we get to the brokerages, by the way. So Vesuvius India, good revenue growth. Margins see an uptick on operating leverage, much like what Astral Poly did. Uttam Sugar performance was also decent. I thought sales up about 8% YOY. The ethanol business was up 74% QOQ, even though it was down 36% YOY. But broadly, the numbers seemed okay with EBITDA up 118% QOQ and 16% YOY. So decent numbers. Like I said, Astral was very strong in the pipes volume as well. And Coromandel was weak. Asahi India Glass was weak with extremely high pressure on margins. EBITDA margins at 16% versus 26%. So Asahi India could be weak. And Subex was the another one which was a wobbly number. A loss of 47 crores versus a PAT of 1 crore left a bit to be desired, really. Philips Carbon Black was, PCBL was okay. So those are a few that stood out for me. Now, just before we wrap up, firstly, focus on these stocks because they had some very strong price volume action yesterday and may not be done with it. So Root, the stock was up 5% on 8x the 2-week average. GE Shipping up 7%, 5x 2-week average. Sobha 11% on 5x 2-week average. Zensar 13% on 5x 2-week average. So price and volume action both seen in these stocks on Monday should be stuff that you should watch out for. What our brokerage is saying, Nomura has come out with a note on OMCs. They've upgraded the stocks to a buy and they've raised the target price. Look at HPCL from a reduced to a buy. The target price raised from 190 to 310. BPCL from again upgraded to a buy, as also IOC upgraded to a buy. Target price is raised in BPCL's case from 295 to 435. In IOC's case from 60 to 100. And the rationale that Nomura presents is that I think the key line for me was the last line here, which is they're saying that their scenario analysis shows that marketing margins are unlikely to fall below normative levels. They've surged 2.5 times to 8 rupees per liter in Q1 FY24, which is good news. And it will not fall below normative levels as per their scenario analysis. And that's why they have the comfort of upgrading the stock to a buy. The problem, viewers, is that HPCL yesterday, despite decent results and positive announcements, failed to react, was actually in the red for a better part of the trading day. So will OMCs react? Don't know. But to be watched out for. Remember, I mean, on the oil side, the windfall tax also has been reduced to zero from domestically producing fields. So oil and gas is in news for more reasons than one. Jeffries had a note on Polycab. They are saying they've retained a buy with a target price of 4290, posted highest ever sales and PAT in FY23. They're saying B2B demand is strong, led by private capex and government measures, and they raised their FY24 and 26 EPS by 2 to 4%. 24 to 26 EPS by 2 to 4%. They say it's their top small and mid cap index pick. Polycab, watch out for that. And for all of you who are wondering, okay, let's first tell viewers about what's lined up on BQ today, and then I'll leave you with an interesting thought on the US debt ceiling. So what's there on BQ Prime today? Well, a lot of guests. So Sonata Software, 9:30 a.m. After the numbers, the conversation with my colleague Tushar. Ramesh Kalyanaraman of Kalyan Jewelers will talk to my colleague Alex today on the numbers, as well as Sanjay Purohit of Sapphire Foods will be talking to my colleague Sajid Mangat at 10:40. Then a bunch of conversations with me. Anthony Cherukara of VST Tillers and Tractors would be joining us. They had a blockbuster quarter and the stock was up 10% yesterday. I quiz him on the continuity of momentum. Remember, the guidance was very large, from 1,000 to 3,000 crores in 4 years. I quiz him on that and the viability of that. And Century Ply had an okay quarter, but management, Keshav Bhajanka, has been fairly constructive on demand. Let's see if they're seeing that in the busy construction season. And then Hiranand Sablani at 2 p.m. with a very good quarter put behind them. It'll be lovely to see how constructive he is about the quarters to come. So a bunch of conversations lined up on BQ Time today. You might want to tune in for some of those. And lastly, I leave you with Nomura's view on markets and the caution. So he's saying, Nomura, Chetan Sheth and colleagues are saying, are comparing this US debt ceiling measures to 2011 crisis. But it's interesting, just hear me out here. They're saying that the 2011 US credit rating downgrade episode suggests that the risk of a sudden repricing lower in risk assets happens as we approach the X date, but stocks tend to react negatively around 2 weeks before the expected X date. And 2011 shows that between 22nd July and 8th August, which was 2 weeks before the actual date, the S&P plunged 17% and the MSCI Asia X Japan Index declined 11%. Now, should that were to happen, or if that were to happen, we are looking at mid-June or the first 10 days of June as being the default date as per Janet Yellen's comments. 2 weeks before that is somewhere around the next 2 weeks out here. So from that perspective, if history were to repeat itself, if the US doesn't reach a conclusion, then the markets might get some jitters and people got to be mindful of that. So be careful, which is why I've been saying be careful with leverage longs. But US, tell you what, on the market, most people go usually wrong. I'm no different. Just prepare yourself for no losing of money, because that is really very, very painful as opposed to not making money, I guess. Thanks so much for tuning into the Trade Setup. Have a great day ahead.